don't think Yellen's going to signal what's going to happen on tapering at the March meeting here. I think the Fed wants to continue to taper. It wants to be on a programmatic path, gearing the tapering somewhat to balancing financial stability issues with a rate guidance focus, which is really on the macro side. But if we're sitting here at the March meeting, we get 3 straight reports on payrolls that average 100,000,
which could easily happen.
But we're not going to see that this week.
I think the market is going to be challenging throughout the whole year. I've said that all along, and I think listening to all the conversations, it's important for everyone to understand one thing. This year is going to be difficult. It's going to be complicated. It's going to be challenging, but there are tremendous opportunities out there. Why is oil trading $100? Understand the consensus has been completely wrong so far this year. They've been wrong on commodities. They've been wrong on gold,
been wrong on bonds,
everything. Wrong on everything.
And I look at energy. That was a group that we've been underweight for a while, and they have just gotten hammered over the last couple of weeks.
Yeah, the week before last, we saw a large inflow into gold exchange-traded products. But as the turbulence lessened last week, we saw some outflows from gold. But, gold is only just sort of part of the story in terms of commodity ETP flows. We've seen very strong flows into soft commodities as the prices have gained. The price of sugar and coffee had turned to multi-year lows a month ago, but as the prices gained, and we saw a 13% gain in prices in coffee last week, a 7% gain in sugar last week, we've seen very strong flows into those kinds of commodity products. During the course of this year, given that most commodity products are cyclical products, we're likely to see more continued inflows. That we're going to have strong growth in most global economies, despite the fact that you had some slightly weaker numbers coming from the US and from China.
The markets are not hugely and fully convinced about Abenomics. We still stay bullish because there is still very loose monetary policy. There is a hugely loose fiscal policy that makes Greece absolutely Spartan in its attitude to fiscal issues. But of course, we haven't had yet the third arrow, and I'm still waiting for it. I want to see the reform part, which possibly we're going to get them sometime in June, which is a long time away, which shows you why the markets can get jumpy. Now, do we like Japan? The answer is yes. Would we like Japan more if there are a packet of reforms, particularly on the labor market, the immigration issue, the issue with the geriatric economy, a geriatric aspect of the population issue, plus the reform of the social security system, which reflects back to fiscal, then we will have it even more. But if it isn't, then we'll say, well, hang on a minute. You cannot sustain the Nikkei by simply pumping more money. Where the earnings are going to come from?